Good morning, everybody. Welcome to the Game Plan, 9 a.m. Eastern Time. My name is Gareth Soloway, and I'm here to guide you through the key things for the day. All right, game plan time. Again, ready to crush it with you guys. So let's get right into the action here. This morning, as we walk over here, we got the CPI data out. Now, the CPI data, Consumer Price Index, it basically gives the market a guide on where is inflation. And that's very key because tomorrow we have the Federal Reserve meeting and Jerome Powell's press conference. And so again, there's no anticipation, there's no chance of a hike in interest rates, but it's the guidance that they will give when to expect rate cuts that the market's going to be queuing off of. And to go off of that, they're going to be looking at this very data that we just got out. So let's start in here. So basically, we have core CPI month over month. Forecast was 0.3%. It came in alignment at 0.3%. So no change there. Market expectations right on course. The next one, CPI month over month. So this is with core included and everything else included. You had 0% expected, but it actually came in slightly higher than expected at 0.1%. Now again, 0.1% is like, well, what's the big deal, right? 0.1%, is that a big deal? Well, when you're literally looking at tenths of a percent to determine when the Fed will start to cut rates in 2024, it actually is kind of a little bit important here. Again, interesting to note. CPI year over year. So remember, the first numbers are month over month. The next numbers are year over year. They expected 4% core CPI inflation. We got 4%. CPI year over year, 3.1%, and we got 3.1%. Now, I'd just like to point this out. All right, so again, the only number that was a little bit different than expectations was this one right here, which was a little bit hotter, like ever so slightly hotter than expected. And overall, this is generally not a bad report. Markets were trading very nicely higher into the number. In fact, when these numbers came out, the market actually popped. And I was watching this in my trading floor just a little while ago, and I'm like, man, you know, we had a hotter number here. Everything else was in alignment. Why are markets continuing to rally up? Well, then we started to see realization come in. And there's this crazy, I mean, right now you have this inherent kind of hopium in the markets where it's just buy everything. And that, unfortunately, is what occurs at the end of runs before you get big corrections. Now, whether or not we get a big correction into year end, I don't know. Right? I mean, it's the holidays soon and so on and so forth. But I would be very nervous the way the market is acting with no fear at all. The VIX in the 12s, these type of things, I look as a trader historically and I say, okay, if you look at the VIX and it was at the 12 level, generally, if you bought at the 12 on the VIX, you made money each and every time when fear finally came back, which it inevitably did. Okay, so in looking at that, guys, what I want to do next is I want to flip back to the charts and let's get into the charts. So as of yesterday was a very normal day, as if nothing was going on. People were sleeping through this day. The markets here, this is the 10-minute channel that I've talked about day in, day out, right? We had the one attempt here, never confirmed, and yesterday we floated neutral to higher, ending higher on the day. One of the things I just want to point out here, and I'm going to zoom in on this because I think this shows you what's going on, is that you get these kind of periods now where you get these interim computerized floats. And so what I want to show you here, this was 2 days ago. I should say this was Friday, right? So Friday, the markets initially had some chop early, right? This was early in the chop, and I apologize if you can't see it. So early in the chop, this was the first 30 minutes to 1 hour of trading on the 10-minute chart. We then saw the algos take over and the bots take over, and look at all these little candles, controlled upside. Now again, this is algos trading back and forth. They're buying, they're selling about at the same price, but then you throw in a few retail investors that are deploying capital, and it gives this gentle, slow float to the upside. No institutional big players are dealing in here. This is the middle of the day in December, getting close to the holidays, okay? Well, then we come into yesterday where we saw the same thing. Early in the day, a little bit of a chop, and then look at what happened again. Just this controlled upside move, lots of little green candles, until the end of the day, a little bit of chop, just like over here, a little bit of chop into the end of the day. Just something interesting to take note of. When the volume gets this light, there's this inherent positive, neutral to positive bias, and then the algos, again, are just keeping this market in alignment, letting it float up, letting it do its thing. I thought that was very interesting to kind of understand when you see this type of price action at these light volume environments and times during the year. All right, now, a couple other things to look at. In terms of technicals, the only things that matter to me here, guys, very simply put, is up here is resistance, right? We know that up here was resistance, here was resistance, here was resistance, and so on and so forth. So if the S&P rallies up to this area, that would be an expected level to see a pullback on. If we see a rollover, this is going to be support. It was support here, it was support here, here. Broke here briefly, but again, no confirmation. Again, confirmation has to occur the next day with follow-through. Follow-through is very important because in this situation, think of how many people got whipped out thinking, oh, this is a breakdown, and then they saved it the next day. It never confirmed. If you follow the confirmation signal, you'll know that that's not a true breakdown yet. You need to see follow-through the next day. We never got it. They brought it right back in. But look at all these hits of this trend line, just going all the way back. And again, therefore, this is the level we're watching on the downside. This is the level we're watching on the upside. Very simple, guys. Keep the chart simple. There's not a lot. You need a few trend lines, a little bit of analysis. That's all you need to do what I do. Okay, now going to the intraday chart, I do want to flip up. In fact, we'll go to the NASDAQ here. So if we flip over to the 10-minute chart on the NASDAQ, take a look at what has happened here. So initially on the CPI data, and this was, I mean, to be honest, I was sitting out there and I'm like, and I even said to my traders out there, I said, I don't get why the markets are popping here. The data was in alignment and it was even a little bit hotter than expected. If I'm the Fed, I'm saying, okay, I mean, higher for longer still, at least keep rates where they are for a significant amount of time. But markets initially popped, and then look at what's happened. We've rolled over. Now, this looks like a big rollover. It's not that big of a rollover, right? I mean, we're basically back to, this is where we closed yesterday, right here. And so we're virtually like fractionally negative on the day. Now, again, tomorrow is the Fed. So we've got this data point out today, these CPI data points. Now the markets will kind of gyrate a little bit today. We'll see if they're down a little. Are they flat a little bit? And then the can gets kicked, literally kicked into, and I always wanted to do that. But anyways, cans get kicked into the day tomorrow for the FOMC statement. All right, so a couple other things. I'm glad I didn't break anything, by the way, doing that. I'm sure the guys in the back room watching here were a little bit holding their breaths. But okay, so on we go. Take a look at the U.S. dollar here, guys. The U.S. dollar chart continues to be up against resistance. The reason why the markets have sold off is because a slightly hotter CPI data, that one little point, 0.1%, the dollar was trading down here. It rallied back here, but we're still under resistance. And my guess is we stay there until tomorrow's Fed decision, when we'll either break through again or we'll break to the downside. Next up, we look at the 10-year yield, same sort of deal. We were into support, we've bounced. Earlier today, the markets were rallying because yields were coming down, and then we popped back up. And so again, you can see that price action still holding support. What does the Fed do today or tomorrow? Does the Fed create some hawkishness? My guess is they will be a little bit hawkish because I think the market has gotten way over its skis in terms of anticipating so many rate cuts next year. And I said this yesterday, guys. It's literally lunacy. If you look at what the market's factoring in, like 130 basis point cut next year, yet somehow we're going to have this perfect landing or no landing at all scenario. If we get no landing or a perfect landing, there's no way they're cutting 130 basis points. So you have one side and one side that can't go together. Investors eventually have to figure out, oh my goodness, if they cut, all right, so let's say they're cutting 130 basis points, then the economy's down here, and that's not good. And if the economy stays here, then they're not cutting rates, right? Then they're keeping rates higher for longer. So it just doesn't, you go through periods in this market of irrationality, and that's just the way markets are. Markets are based off of fundamentals, and which we, again, can look at over the longer term. On a shorter term, it's technicals, right? Technical analysis gives us these short-term support and resistance levels. But over the very near term, you get into this cycle of emotion, and emotion creates overshooting to the upside as well as the downside. In my opinion, that's what we're in right now. This kind of like Goldilocks, somehow everything's going to work out. I said it yesterday, kumbaya, right? That type of mentality. Okay. One stock I want to go over real quick, guys, is Oracle. Take a look at Oracle. Now, this is another conundrum to me, right? So Oracle's a pretty big company. I mean, this is a $200, $300 billion company. The stock reported earnings yesterday, and it got crushed. I mean, you don't see Oracle down almost 10% on a daily basis, or even a weekly or a monthly or a yearly basis. Like, I'd love to even know when the last time Oracle was down 10% in one day was. I bet it was years ago. But the stock got crushed on earnings. All right, now we'll talk about levels to play this in just 1 second, but my point again is that this morning the S&P was up, the NASDAQ was up. No one gave a crap, frankly. They're like, whatever, no big deal, just keep buying the market. That's that irrationality that we're dealing with right now, which eventually will flip, but not at this point, obviously, or at least not as of this morning pre-market before the CPI data came out. Now, in terms of where to buy this on a pullback here, we're trading at 104.34. Let's flip back to the daily chart. All right. Now, if I look at this chart, what I see right off the bat is a couple levels to take note of. Number one, we have a trend line right here connecting our pivot lows. That happens to be right around 104.50. So essentially, we're trading at a little bit of support here on Oracle. I don't like that. I don't like buying right where it's trading, especially if it's traded below pre-market. So where's the next level here? So the next level to me in terms of Oracle, okay, would be likely there's a high-risk support right at this pivot point here if we drag it across. Now, the reason why that is a support level, let me go over it right now. All right, number one, it was this pivot low right here. Number two, there's a small gap. I don't even know if you guys can see it here, but there's a small gap fill right there that would align at around 103.35. So that would be a very high risk level. I don't know if I'll play it there, but that would be a very high risk level opportunity. If we break below that, then you know where you're going. Pretty easy to spot this one. You're going basically to the even number, which is my favorite. I love even number pierces. Right at this low pivot here, okay, right there, that low pivot becomes a pierce of 100 even number, double bottom. That, to me, would be a very interesting level on Oracle. All right, enough said there. We're going to take a quick second, guys, as I flip back to center screen here. I do want to just take about a 15-second break to just thank iTrust from the bottom of my heart for being a sponsor. You guys seriously rock, and I do appreciate you giving us the ability to spend money to create this and do all these screens and do everything we do. So check out iTrust, people, and check out this quick little ad.
Do you have an existing IRA or retirement account? iTrust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is, they make it simple. All you have to do is transfer your preferable amount of USD through iTrust and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through iTrust Capital.
All right, guys, we're back over here now. Now, yesterday, remember, natural gas was befuddling me. But after some further analysis, we have some information, or I have some information to show you. So I did find a trend line that we hit yesterday on the chart of natural gas that makes sense why you may have a short-term support in this range. So let's go right to it here. All right, so here's your natural gas chart, right? Now, if you go back to the lows of COVID, all the way over here, right? We're talking June of 2020 before the big run up, and you take that low and you connect it to this low here in early 2023, it actually goes right to the lows as of yesterday. So again, that gives us a very beautiful little pivot point to watch. Now, let's be fair. Every level so far has been wiped out. It's just price has just gone through it. So we'll have to watch and see what happens here. But the positive was, and this is the kicker, guys, if we flip back to our daily chart, yesterday we did put in a bottoming tail on the chart of natural gas. All right, so if I flip here, I want to show you this, right? This tail, see this long tail where we closed in the upper range? That to me, again, that is called a technical bottoming tail. And until proven otherwise, that is a low pivot in the chart. Now, how would it be proven otherwise? Any daily close below that low from yesterday would then essentially negate that as a bottoming tail. You'd still have the support there, by the way. But basically, we're talking about 226 on this chart. Any close below 226, it gets negated. Aside from that, you do have a short-term bottom with a trend line now to trade off of. You're getting a retrace. So one of the things I like to tell people, and this is kind of a secret of mine, I talk about it in the Winning Trader series, but when you get a bottoming tail, right? So here's your candle. In general, most retail traders will buy this right away. Like here it closes, they're buying it, hoping it goes like this. 7 to 8 times out of every 10 on bottoming tails, you get what's called a 50% retrace. Wherever the middle is, you look at that as your buying opportunity. So you actually don't chase. Okay, you say, okay, great bottoming tail, but now put your order or look to retrace 50% and then get the move up. And essentially what you're doing is you're lowering your stop because your stop is any close below the tail, and you're buying it at a discount from where it closed, so you're actually getting more reward and lowering your risk factor on this trade. So the beauty of it is, if we look here, look, you've already retraced today over 50% of the natural gas chart. So if you did just play this bottoming tail, you could basically be a buyer here at the current level of around 230, right? And then if it closes below 226 on the daily, it has to be a daily chart close because this is a daily chart, you would stop out immediately, keeping your risk very low, but also keeping your reward. If this thing starts to move up, who knows how high it could go. So there's a little update from yesterday on the chart of natural gas. Quickly looking at Bitcoin, not going to spend a whole lot of time here. Bitcoin had that big dump out yesterday, guys. This killed the bull flag. So remember, bull flags are right angles or 45 degrees. This was a right angle, and now it's not. So it's no longer a bull flag. It doesn't mean it can't start turning back up, but it increases the probabilities that you may come back to this area here, which again was this consolidation basis around 38,000. 38,000 is now your support level on the chart of Bitcoin. All right, now let's flip around to gold here. So gold, we talked about this, guys, right? So gold was a technical buy yesterday at these key levels. All right, you can see again, if we look here, and in fact, I'm going to flip over to my daily chart, but we basically look at gold, we can see this trend line right down here, sloping down, right? Sloping down right in. We are a little bit below it, but I think that's okay for the time being, and I'm going to show you why real quick. If we take a trend line here, and we just extend it right from this pivot high right across, you actually get your exact low from yesterday. All right, so again, gold early in the day was having a pop because the dollar was dropping. Once that CPI came out, the dollar began to rally. It brought gold back in, but you still have a small little positive flow. I continue to maintain that it's really important for gold to hold this key level around 1985, 1975 in that vicinity. All right, that's the key on gold. I do want to see it hold that level. All right, another chart that I've been intrigued by is the chart of silver. Silver, as I said yesterday, did come into technical support. So again, look at this, guys. So silver, again, was having a good rally early. You can see a tail up here. But because of the strength in the dollar rallying on the CPI data, we've had this come back in. Now, still it's a green candle on silver. So silver is still getting a bounce. And by the way, it should. If you know your methodology that I teach, it's a 7 count. 1, 2, 3, 4, 5, 6, and 7. You're supposed to, if you have six big green candles to the downside, probabilities dictate on the 7th you'll get a bounce. Look into 7s. It's a major number in all things that we do in life, in biblical sense, and by the way, all biblical books as well. It's amazing, actually, if you start paying attention to 7s. They pop up every which way. Lucky 7, right? In any case, here you have it. We're getting a little bit of a bounce. Notice the trend line right down here, right? So if we look at this pivot low connected to this pivot low, look at where we stopped on a dime right there on silver. So kind of interesting to see that right there as well. All right, last thing we're going to go over is oil here. And oil, again, after a couple bounce days, is starting to drop lower again, guys. You can see here, over here, we had a couple bounce days, and we're just in one day, just one day, we're pushing right back down to those lows. Remember, there's a target price on the head and shoulders, right? So we know that the head and shoulders is getting close to being achieved. If we look at that, we can calculate it out real quick. We drop that plumb line down. It's basically $14 from this break point right down here. So we're very, very close. In fact, we're touching those targets. My one other factor here is that we're getting into this low around 67 to 68. I will be looking, folks, and I know it's hard to see here as it's zoomed out, but I will be looking actually for a long on oil if we get down to about 68 to 67. If you're a member in InTheMoneyStocks.com, obviously I'll put it out. Usually I'll use the USO or something like that. But check out InTheMoneyStocks.com, verified investing alerts. And obviously for the crypto stuff, it's at verifiedinvesting.com right there. All right, bringing it back center stage, guys, here. So again, markets are incredible. They're constantly fluid. We're going to see what the markets do today. Do we get any sort of selling? Do we get any sort of pullback ahead of the Fed tomorrow? The VIX, again, I haven't gone over the chart of the VIX, but I talked about the VIX. The VIX is at historic lows, not all-time lows, but historically anything in the 12s or lower is like a warning sign. Now, you might say, oh, well, why is it a warning sign? Well, because it basically tells us that there's complacency in the market. No one expects anything bad to happen. Everyone expects things to be perfect, and you can see it in the markets. The S&P just seems almost daily to be up slightly every single day nonstop. That, again, could change. Think about what happened to Bitcoin and crypto just in the last 24 hours. All of a sudden, we saw a 10% drop in those. That can happen to the stock market in the blink of an eye because the complacency is there, and there'll be a lot of players that have gone long that would get panicked on any sort of drop. So just keep that in mind. Be wary. These are the periods where you actually have to be more conservative, even though you'll hear from the talking heads like, oh, the all clear sign, perfect landing, all this stuff. Be smarter than that. Be logical, okay? Be kind of the better investor, if you will. All right, which one to throw? We'll throw them both. Here's one, and here's the other. You guys have a good one. Take care.